Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Hi, I'm Jeff Barton. Welcome to the Mortgage Voice. We're on each and every week on this, as well as other stations. We're on 5 different stations, 3 different states. The Big 8 podcast there. What are those Big 8 podcasts? You got them handy there?
Yeah, that would be Apple Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, and of course, YouTube.
Excellent. Thank you very much. I am Jeff Barton. And if you go to YouTube, Mortgage Voice, Jeff Barton, the Mortgage Voice, that's our channel. Click on that you like it. Try to join. I mean, more times you do that, the more people get to see what we're doing. And what are we doing? We're trying to stay focused on some of the problems right now, getting a loan, or some of the solutions that others may have. We'll share it with you. We can bring on to the show lenders, different people in the industry. On today's show, we're going to have a number of people that we haven't had on before, social media people who are loan officers in different states, as well as some mortgage loan program solutions. There's a lot more to it, and most people who read about what we're doing or see it go, mortgages, yeah, you're right. You're going to do that unless you need one, and then you're like, oh my gosh, what am I going to do? So if you need that information, this is the place to go. There are several shows like this on air or on a podcast, but nothing that brings the type of interview style that we do to the show. And tooting my own horn here, but 3 guests a week for 7 years. We've interviewed hundreds and hundreds of people who have solutions and who are there available for help. Now, this is a money-making job, right? Everybody knows that when you get a loan, there are people making money. And one of the things that you can do about finding out how much they make and if you can bargain with them to get lower fees, that's all part of the process by which you have to be comfortable with or trust in your mortgage broker, mortgage agent, real estate agent, anybody else in the business who has a hand in what you do, what your loan is. And the more you know, the more you're going to feel empowered. Hate the word, but it is accurate. The empowerment of you in the mortgage process is the way that you're going to be able to feel as if you're going to get the most out of your transaction as possible. The worst client that I have is the one who says, oh, you just do everything. That's not how I do it. And when I get someone like that, I have to make doubly sure that they are triply informed as to what's happening at every phase of the transaction. What are the phases? In a purchase, the number one phase is to be able to get the client pre-approved. The pre-approval process requires 6 different pieces of information and then a loan estimate generated by me in order to have them be able to go to their real estate agent and say, here is my loan approval, let's go get a house. That's the best way to ensure from the beginning that you've got what you want. Now, how do you get to that point of choosing a mortgage broker? Right, and I've said it many times, you have to interview, you have to look around. Yes, Uncle Joey's kid on third cousin once removed says that he has a friend. Yeah, there is that way to do it. And many, I would say 80% of the people go through a recommendation by somebody else. But you need to educate yourself. I know you've got COVID to think about. You've got your job, or you don't have your job. You've got considerations about whether the world is imploding or whether it's about ready to blossom. You have all these pressures from your family, your friends. You've got a busy life. Let's just say it like that. So interviewing or finding a mortgage broker or talking to 2 or 3 of them, it takes a 10-minute phone call. That's it. Before you either feel good about the person or you don't feel good about the person. Once you have a relationship kind of in the making, you can ask a few basic questions. How long have you been in the business? How many people do you represent a year? Do you have time for me? That's the flip side of someone who's incredibly busy, is you want to make sure that they have time to be able to solve your particular problems or issues or whatever it is in order to get a loan. I had an issue today come up. The lender wanted to have a rent roll from the seller. That was on the appraisal report. Now you may say, well, okay, fine. So that was a rental property. No, it wasn't a rental property. The seller lived in the property, but the buyer was going to buy it and rent it out. So therefore, the appraisal had to come in with a rent roll, what they call a rent roll, meaning what will the property rent for? Now, unless it's called out in the appraisal to do that, which it was, but the appraisal person did not do it, it's delaying the loan by a week. Now, that's an issue that comes up, right? So you want to make sure that the people that you're talking to have some solutions to problems or solutions to whatever your particular situation is. In this particular case, the borrower, he's got an 800 FICO, he's coming in with 25% down. The issue was not that. It was about the loan itself and loaning on the income they're going to generate from the amount of money they're making in the rents. And that comes up a lot. It's important to understand that these DSCR loans, and they're basically and we've talked about it on the show. We've had a number of guests on the show talk about it as programs for their lenders, the lenders that they represent. Malibu Funding, who sponsors the show, thanks to them. They're a broker or a lender, and a lot of other people who come on the show are particularly lenders, and they talk about you can get into a property right now if you use the money that you garner in rent from that property to pay for the mortgage. Matter of fact, that's all you need to show to get a mortgage. Now, that's a pretty amazing thing, right? So all of these programs and these issues and solutions that we come up with, that's what we deal with on the show this week, next week, every week. Now, the country's fallen to a hoot in a handbasket, and unfortunately, it does affect the financial markets. What we've seen recently, and I'll just give you some idea, the bond market. The 10-year note is how we really regulate or I guess price in what's going on in the mortgage market. For the last, I don't know, year and a half, maybe not year and a half, maybe more like a year, we've dealt with the non-Fed intervention, and now we're dealing with Fed intervention. And the Fed intervention comes in the form of buying mortgage-backed securities and buying treasuries. When the Fed did that, it stabilized the mortgage market, actually drove rates down. And by driving rates down, it actually made real estate and mortgages one of the pillars of strength during COVID. So we developed even more so the haves and the have-nots. If you have a house, you're in good shape because you've seen your house values go up and you've seen your options to be able to lower your payments also be plentiful, meaning that the rates have gone down, keep going down, keep going down. Well, currently we're in a bit of a shift. We've got a number of things happening, right? We have, let me just read it because I wrote it down to make sure I didn't miss anything. We have the change in the government, right? We have the old president and the new president. This is what's happening. We have COVID. We have the vaccines. We have the joblessness, and we have those with jobs. We have the stimulus. We have a growing stimulus. These things that are happening are in flux. Markets hate flux. So what is going to happen when in regards and what comes by the rate that you're going to get for your loan? The thing that's going to change here is unknown. So what happened today in the treasuries? Now, we've been talking about treasury yields. Yield goes up, rates go up. That's traditionally how we do this until the Fed stepped in. But now we're back in a cycle whereby, because of the major things happening, the other outside events going on have begun to affect the yield by which the Treasury has to sell the 10-year note. So the 10-year note today, let me just see what it is. I've got it here at 1.167. It breached the 1% or 1 point last week. And now we're already at 1.167. Now, the key here is we've been predicting this range of 1.93 back down to 0.50. That's been the range for the last 18 months to 2 years. Can we hold below 1.25 for January? That's what we're all thinking. If we can, we might be able to hold rates where they are. If not, rates are going up. I'm Jeff Barton, your voice in the mortgage industry. Thanks for tuning in. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in each and every week. We really appreciate it. We're on the Big 8 podcast, 5 stations in 3 different states. And if you want to see the show, a couple of radio stations carry it. But you can also go to YouTube, Jeff Barton, the Mortgage Voice. We talk about solutions here, and we bring in experienced people from all over the country in order to tell you what's going on in those particular states. With us today is Simi Albo, and she's from Conquest Mortgage down in Florida. Simi, how are you? Thanks for coming on the show.
Hi. I work for Nexa Mortgage. Sorry to correct you.
Oh.
Thank you so much for having me.
That's okay. What's the name of the mortgage company?
Nexa.
Okay, very good. And where are you located in Florida?
What did you say?
Where is it, the company?
The headquarters is in Arizona, but the
Okay.
company has license in 48 states, and they are the second biggest mortgage broker in United States.
That's okay. Very good. Tell me a little bit about, I know that we had talked off air about some of the charts that we had been passing back and forth. Tell me why that's an important, I guess, bit of information for those people trying to refinance right now. Why now?
Sure, because right now we are in historic low interest rates. We are in interest rate in the highest two, even low 3, and historically that never happened. I send you a chart with the average interest rate, and the lowest was in 2016 with 3.65%. We are lower than that, and I don't know till when this rate's gonna be like this. And for a financial perspective, it's a really good business to refinance because we have a cost of opportunity. We can get the money right now, and we can invest this money in something else that produces more money, like the Standard & Poor's.
Are you worried that rates are going to rise this year because of the change in the federal leadership, as well as some of the other things going on with COVID or the vaccine or joblessness and maybe people getting back to work? What are your feelings going forward?
Yes, personally, I think the rates gonna go up. They are so
Yep.
low right now. If the governments continue to give a stimulus, they are printing money, so there is inflation, and if there is inflation, obviously the interest rate gonna go up.
Yeah, I agree with that. I'm not sure, since the entire world is printing money, how much inflation is going to affect us versus everybody else. But given that, I do agree with you that interest rates will go up.
When you have more money than goods, or you produce the same amount of goods and you have more money, of course, everything gonna rise the prices. So we're gonna have inflation if the government decides to print more money. So right now, we don't know. We don't have a crystal ball. I think interest rates as low as this, we won't have it.
I think the rates are going to go up. I think right now they're going to be the lowest they're going to be all year. That's where I'm coming from, I think.
I agree with you.
Mm-hmm.
I agree
And
and
now,
sometimes you may have the fear that they don't want to refinance because of the closing costs.
yes.
And they don't know that we can also refinance, finance the closing costs. So what we do is that we raise a little bit the debt in the mortgage, and we start. We are able that the out of pocket the day of the closing for the client is gonna be very low. It could be $100, $600.
Mm-hmm.
So it's a win-win situation.
Now, where is your particular office? So are you still down in Florida, or are you some other state?
I am in Florida.
Very good. Yes. The company I work for has an office in Florida as well. And what do you see in the economy in Florida, which might give you an insight as to the ability of borrowers to use traditional methods to get a loan, i.e., I'm working, here are my paychecks. What's the employment situation down there?
You know, a lot of people from the north are moving to Florida and they are buying houses. So
Okay.
that's a big market right now. A lot of people are refinancing. You know, usually my clients that are around me are people with very high credit scores. They have very good jobs or they are self-employees. So, you know, they want to refinance because it's very convenient for them.
Right. And I think, and you correct me if I'm wrong, having your house as a way by which you can use the equity in it rather than having it sit there is probably good for a lot of these borrowers.
Yes. Right now I have a client that he wants to get from his primary home $100,000 because he wants to invest $100,000 in something else.
I
You know,
see.
in raising the tools, you have a cost of opportunity. You can get this money, invest in something else, and make more money.
Do you see that the way that your state has handled COVID, i.e., allowing businesses to stay open, has that helped or hurt in terms of buyers wanting to go out and see houses? Do you see it affecting behavior more than I say in other states? Meaning, in most other states, a lot of the real estate is now done virtually. Is it like that down in Florida?
I think here people are doing both,
I
depending
see.
on how you feel comfortable. There are some showings that are virtual, a lot are virtual, and others go to see the properties. I think people here are a little careless,
Hmm.
and that shouldn't be like that. That is why the cases here are so high.
Right.
But the economy, you know, is moving, and we have to continue to live. We need to learn how to live with this virus. Hopefully, with the vaccines, everything's gonna be fine in a few months.
Yeah, I agree. I hope so too. Tell me some of the programs that are popular right now that you're seeing through your company.
Repeat your question. The problems that I see.
No, the products like the mortgage products, 30-year fixed, or is it 15? Are you seeing more FHA? What type of loan products?
I see everything. In my particular case, I see many people who want to refinance their house for 20 years, 30 years, 15
I see.
years, conventional loans, jumbo loans, you know, a little bit about everything. You know, our company, we have 110 lenders, so we are capable to customize a product for each client. So, you know, whatever the clients need, we can satisfy his needs. In my case, I work mostly conventional.
I see. Okay. Hey, could you do me a favor and let people know how to get in touch with you if they're moving down to Florida or need a good loan officer down there?
My website is simialbo.com, SIMIALB as a boy, o.com. And my cell phone number is 786-247-7253.
Simi, that's great. Thank you very much for coming on the show. I really appreciate your expertise and the way you see things, and we'll have you back again soon enough. Thanks very much.
Thank you for having me, Jeff. It was a pleasure.
Thank you very much. That's Simi Albo, and she works down in Florida. Terrific loan officer. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in and listening. Thanks very much for coming to the show on a daily, weekly. I mean, we're all over the place, right? We're on LinkedIn, we're on Facebook, we're on Instagram. Those are our daily 1 to 5 minute shows. And then, of course, we do the radio show, which airs on 5 stations in 3 different states. The Big 8 podcast. Daryl, you got a list of those podcasts there?
Please? I do. Matter of fact, it's Apple Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, and YouTube.
Yes, and YouTube. We shoot this for TV and YouTube. We post it each and every week. Jeff Barton, the Mortgage Voice. Go there, see the show. And if you like any of it, in any one of these places that you can see here, say that you do. I mean, sign up for the weekly or daily or monthly tune into what we're doing. It helps other people find the show. The information is important if you're looking to buy or refi. One of the things that we do on the show is we bring experts to it. This next guest, Nita Penny, who's been on the show several times. We've done a couple of specials talking about reverse mortgages. And Nina, first off, how are you? And Happy New Year.
Happy New Year, Jeff. I'm doing well. Hope everybody is being safe and doing okay as well.
Thank you. I wanted to ask you on the show today because we have a new administration coming in. We have a new Treasury Secretary. We have a new Secretary of HUD. And I don't know if old plans get changed that quickly at any of those agencies, but what are your prognostications? What do you think is going to happen with the new administration coming in? Do you think we'll get more loosened guidelines to what we're doing in the reverse field, or do you think it's going to remain pretty much the same?
Well, I think just like everybody that's in the mortgage business, we all have some concern about, what tightening we might be seeing,
Right.
what might be going on in the future. Reverse mortgages are not, we can see change too. And if we see the change, it's not going to be friendly, just like any other type of loan.
Right.
The nice thing is that, we have just gone through an index change.
Yep.
We used to use the LIBOR, and we switched over now to the CMT.
Explain what that is for people who don't know what that is.
That is the currency market treasury. And that has taken the place of the LIBOR rate. And at first there was some concern. People weren't sure how it would do in the market.
Mm-hmm.
So a lot of lenders were a little bit high in the pricing for the beginning in the month of December. But you know what? They're finding that the first couple of sell-offs of bundled loans really went well.
Oh, great.
Things are looking good. Our numbers are up on reverse mortgages. Now with the new administration and the fear of raising taxes, people are looking at home wealth to tap into it and hopefully create some kind of a safety net or something for them. God knows what's coming in the future.
Yeah, good point. And I think because you have seniors who, for the most part, have their homes paid off, I think there's a huge number of seniors, people over 65, 62, who have their homes paid off. But they're coming into a situation where economically it's a little unsure. We're not quite sure whether we're going to see stimulus for those people who have a job. We're not, it's just unsure. Give us your skinny on what's happening in the reverse field to be able to try to help people both economically and to get some peace of mind with maybe some money in the bank.
Well, the nice thing about reverse mortgages is that a lot of times, we get people that qualify on just basically their Social Security income. So that's consistent. We don't really
Right.
have to worry about that so much. But I think people are concerned about, the cost of medicine,
Yep.
the fact that, some people are concerned what happens if something drastic happens and they can't have access to a Social Security fund. People just overall are concerned. It's very, we're in uncharted territory.
Mm-hmm. Yeah, I think so too. And because there's a difference between when you can retire or when you do retire and when you receive Social Security, there are these in-between years. I'm currently 65 myself, but cannot collect Social Security until I'm 67 and a half. So, and that number is anticipated to go up, as you know. So if you are retired earlier than that because of, for whatever reason, you have these gap years where you're not making anything, and maybe a reverse mortgage would be a good thing for somebody, especially since they can get it at 62.
Sure, and I'll give you an example of that. Let's say you have equity in your home, right?
Yep.
And you are 65 or 62, and you don't want to take your Social Security. And you take out a reverse mortgage to use it kind of, let's just say, as an annuity for so many months, right? So let's figure you take out $500 or $1,000 a month out of your reverse mortgage until you hit the year of when you can take Social Security. Now, here's how we like to look at it. Would you be okay with borrowing money at a rate of 3% to get an 8% gain when you get your Social Security? Now, any financial advisor you talk to is going to say, absolutely, that's a no-brainer, right? And that is one reason why people are using reverse mortgages to fill that gap. You know, you have a lot of equity in your home, or you have some equity, you can use a reverse mortgage to cover the gap between now and the time that you want to get your Social Security. And then, you know, if you want to pay it back once you're getting your Social Security, you can, but you're not obligated to do it.
Yeah, I like the fact that it's not just us saying it or Tom Selleck saying it. It's people in the financial world who are saying, look, this is a good way by which you can bridge the gap to where you're making your Social Security. And I think that that's a great way to look at it, especially since, like I say, there are experts saying this is a good thing to do. The rates for the reverse mortgage, since we've seen in the last few days, maybe a week or so, overall rates rising somewhat in the market. Where do you think that, and how do you think that'll affect what we're doing in the reverse mortgage field?
Well, if rates go up, they will go up. You know what? To help offset the rise of rates, we can adjust our margins more easily than, you could ever do on a fixed rate for a conventional loan. You have no control over doing that. In the reverse business, we can do that. We can adjust our margin to give a lower rate to help offset that gap. Okay?
That's a good point. And I think people who don't understand that miss that this is an advantage to doing a reverse mortgage. Being able to adjust fees or rate in order to assist the client in reverse is not allowed in a forward mortgage.
Right. And the thing is that if you go to the right loan officer or the right certified reverse mortgage professional like myself,
right,
we are there for the client. You will see us covering a lot of costs. You will see us giving a very low margin, doing what we can do to help our clients. For us, that's our passion.
Okay, so this is 2021. We have a new administration coming in, as I have said, dealing with COVID, dealing with the vaccine, the joblessness. There's a lot of nervousness in the market. Reverse mortgages for people who are my age and older is a way by which we can obviously make them financially in a better position. What's the resistance to it? What do you see out there as people saying, hey, I can't do that. I don't trust this.
Yep. You know what? A lot of it stems from the very first reverse mortgages from, let's say, 1960 to the 1980s. So all the conceptions that you have today are based from that time frame. That's what they did, shared equity. And, when the senior passed away, if they owed money, then the lender would go after the heirs. If there was a profit after the house was sold, the bank would come and split it. So these are all things done before the 80s, before Ronald Reagan sent this loan to HUD. And HUD backed it up with mortgage insurance, just like an FHA loan. You know, FHA loans have upfront funding, upfront fee.
Right.
And the mortgage insurance, VA loans have funding fees. USDA loans have also upfront fees. It's no different. It's basically just an insured loan, and you're going to pay for it, and it's going to cover you and cover your heirs.
Okay, let people know how to get in touch with you. You've got a lot of great answers. You're certified expert in the field. Let them know how to get in touch with you, please.
Sure, they can email me at N like Nina, H as in Heidi, PENNY at MSN.com. You can call me at 480-635-2410, or you can check out my website, which is simplereversemortgage.net.
Nina, thanks very much. A lot of good solutions. Appreciate it. And we'll have you back in the first quarter to let us all know what's happening in the reverse field. Thank you very much.
Super. Thanks a lot. Bye-bye.
Okay. Bye. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in. Thanks very much for listening each and every week. We try to bring some solutions to problems. Look, it's a weird world out there, right? So can you really rely upon the lender to close your loan on time? Can you rely upon the funds being there? If you're in any kind of these cities that may or may not have some civil unrest, can you get to your closing date, which is going to happen next Wednesday? I mean, there's some real practical stuff that we talk about on the show, but we do bring to the show 3 people a week who give us some perspective as to what's going on in the world. As everyone knows, we're on 5 radio stations in 3 different states, as well as YouTube. So if you go to YouTube, Jeff Barton, The Mortgage Voice, you can see the show. We're also on the Big 8 podcasts. And so today, last guest of the show, and I really appreciate him coming on. He's part of a podcast and radio show network that we all belong to, Jay Izzo, and he's from coachingmavericks.com. And I welcome to the show now. Jay, how are you?
I'm excellent. How are you, Jeff?
I'm okay. Actually, one of my lights just went out, so I'm a little verklempt. But beyond that, I'm doing very well. Thank you for coming on.
Awesome. Oh, you're so welcome. I look forward to it. Matter of fact, I love your show. I got a chance to listen to a few episodes, so it's a great show.
Thank you. And I've listened to your show as well. And I was, it's funny, your picture and how the show is presented belies the fact that you're a very introspective and thoughtful guy. And so I just wanted to let you know that it surprised me. It didn't shock me. It just surprised me because, you see a picture and you don't know. But I really appreciated it. It was thoughtful.
Well, a guy in a Stetson, 64, 65 boots, belt buckles, and a Stetson hat and a pair of blue jeans.
Right.
Think about them as being an executive coach or, having his master's in doctoral work in psychology, which is really to my advantage, honestly, and that's why, Maverick coaching is what Maverick coaching is because I'm a Maverick. I do things in my own way, and I coach people who like to do things in their own way. And because, we're like none other and we're unbranded, which I think most people kind of enjoy being.
I agree. And I think in a world that is so full of placing people in corners, on sides, it's nice to see that doesn't always apply. And to those people who can, brave the criticisms or whatever, it's good. And I wanted to ask you about your website and your coaching and how you bring entrepreneurship and some of the other things to light, because we're going to need a lot of that in the coming months. Give us a kind of an overview, a little bit of what you do for people.
Yeah, so because it's not like a one-size-fits-all system. It's very tailor-made to the individual, which is, again, the Maverick part of it. But because I take a psychological approach and I take a whole person approach, so we cannot be successful if we don't look at 4 particular areas of our life: physical, mental, emotional, and spiritual. If any one of those areas is falling short, we are not going to be the best person that we can possibly be. So for me, I want to see what you are doing on a regular basis to train yourself in those 4 areas. I've had the pleasure and privilege of being able to interview a number of special operations forces men, from Delta Force to Green Berets to Navy SEALs and others. And one of the things that really appealed to me, and something I was doing, and I just didn't recognize I was doing it, in their language, pressure or stress, we only fall back to the level of our training. And so what I try to do with my people is I try to bring up their training in those four areas of your life. So physically, we're looking at not just exercise, we're looking at getting enough sleep, drinking enough water, eating right, doing the right things to your body, and I'm checking in, regularly with my clients as to how are you doing, right? We rank them on a scale of 1 to 10. Mentally, what I'm asking from them is, what are you doing to actively participate in your own growth, whether that's in business or your personal life, and hopefully both, meaning that I want you to take an active role in like reading something that you're learning, and that you're not only learning, but you're applying that back to whatever you're doing in your life. So if it's in your business, and let's say you're reading about, managing people. And so we're going to talk about that book. We're going to talk about what you're learning, and then what are you going to do to apply what you've learned in that book? And that we can grow in wisdom and knowledge and understanding emotionally. What I'm asking them to do is I'm asking them to do two things. One is being better at controlling their emotions under stress and pressure.
Right.
Because that's a choice that we all have. I'm not saying it's an easy choice, but as I used to tell my psychology students when I was teaching in colleges and universities, I would say to them, look, you can kick me in the shin as hard as you want, but I have a number of choices of how I'm going to respond. I don't have to respond by kicking you back. I can actually, if I choose to, I can actually laugh. I can walk away. I can cry in a corner. I can go punch a wall. I can do a number of things, but I have a choice of how I want to emotionally respond. That's the first piece. The second piece is getting my clients to understand really the emotions of other people, meaning can they really understand what a person is saying from an emotional level? And the reason why I ask that question is because I work with a lot of CEOs and I work with a lot of C-suite professionals. And one of the things that can sometimes be difficult for them is that they're so on top of the numbers and they're so on top of, systems and processes that a lot of times they forget how to really listen and really tap into the emotional responses of their employees. And so they're not really hearing the whole message. They're only hearing a part of the message. So, we work together and on that, about what can you do. So a lot of that for a lot of us, a lot of times is just having better emotional grammar and being able to understand what those labels are in terms of emotional grammar, because typically, we think of things like I'm sad, I'm mad, I'm happy, but there's variations within that, maybe you're miffed, right? And everybody's going, oh, miffed, right? Well, I can tell you that your female listeners, when I say miffed, gets it, right? Because they're better in tune with the emotional piece. And then finally, the spiritual piece, whatever brings you to center, even in the midst of chaos. And let's face it, we're in a pandemic. Yep. And so the spiritual piece is really important. And, there's a number of ways for people that they try to get back to center. For some people, it's God. For some people, it's nature. For some people, it's meditation. Whatever that is, I want to know, is it working? Because if you're not getting back to center, or if you don't have a sense of peace in the midst of chaos, then we got to find something different that is working for you. So we start with those four areas, and then we branch into dealing with, the business issues, right? Because at the end of the day, it's people issues. It always is. I would say 99% of every issue I deal with has to deal with, people, right? Whether it's,
let me ask you a question on that. Do you have a exercise or something that you put your clients in situations where they have to not necessarily role play, but they actually get to participate in the solution by confronting whatever it is that they're dealing with, either one-on-one with you or in a group situation, so that they can improve? Or is this all done through the written form? How are you doing it?
That's great. Great question. Yeah. So we do one-to-one sessions, and in these one-to-one sessions, we do role play it out. So I will have them I will give them a script of, how we may be dealing with the situation with another person. And instead of just sending them out with that script, I literally will ask them, okay, now let's put it in your words. How would you do this? Based on, your strengths, one of the things I will tell you is that I did use the Myers-Briggs to kind of get a communication profile with my
Right.
people, and then I also used the Gallup Strengths Finder so I can figure out what their top 5 strengths are. I do
Right.
use those things, so I have a little better understanding of, what their weaknesses are, what their strengths are, and
Sure.
that they can utilize those in order to be a better communicator, right? Because
Of course. Hey,
honestly,
Jay,
some
we're,
people,
we're up against the clock right now, and I want to have you back on the show because we didn't even get into, the books you've written and the experiences and some of your personal stories, which I'm sure are insightful. But we're up against it. How do people get in touch with you, and what's the best way by which they can, get going on something like this, training wise?
yeah, great. Yeah, you can go to coachingmavericks.com. You can also go to jayizzo.com. That's JAYIZSO.com. And they can also find me on all the social media. A lot of times I'm also under the Internet Doctor that you can find me, or you can just look up JAYIZSO. I'm on all the social media. I'd be happy to respond to anybody. I pretty much accept every friend. So let me know that you heard me on Jeff Barton Show, and I'll be happy to connect with you anywhere, whether that's LinkedIn, Facebook, Instagram, you name it, I'm there.
Jay, thanks very much for coming on the show. I want to have you back. Like I say, this is interesting on many different levels and something I think we're needing right now. And I appreciate you coming on the show.
My pleasure, Jeff. Anytime, just let me know, brother. I'll be happy to come back on.
Thanks, Jay. That's Jay Izzo from Coaching Mavericks. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks again for listening to the show. We're down in Albuquerque. I've called that Association of Realtors down there several times looking for an expert, somebody who can come on the air and talk to us about the local market, what's happening down there. We're hearing that there is a huge, and everybody knows it who lives down there, but for those of you who don't live down there, there's a huge oil boom going on in southern New Mexico, and how that's going to affect the real estate market locally as well as throughout the state. They're talking about some of the biggest oil reserves in the world, oil and gas. And this is, really something that may change the landscape of both real estate, mortgage rates, and the availability of product down there. Now, one thing about New Mexico that a lot of people don't understand, it's a they protect your privacy down there, meaning you don't have right to public records. So you can't get online what you can get in many other states, especially if you're in the mortgage and the real estate world, getting comparables, getting mortgage interest rates, finding out information about a particular. There are unique differences in your city, in your state, that are happening now and are traditional, which I really want to bring to the show. So if you know anybody down there, shout out to here. I'd really appreciate it. And we're up in Las Vegas, AM 1400. I want to thank the people up there in Las Vegas, Nevada. That is a place too, which has changed quite a bit since I've been there since 2004. I mean, it was a lot sleepier place than it is currently. About 2.5 million people live there. We're waiting for COVID to end so that really can get fired up and keep going. And what's the guy's name? Adelson, who was the owned Sands Hotels out there. He passed away.
Many years ago.
Yeah, well, no, he passed away just like a couple days ago. And
current owner, yeah.
Yeah. I forget his name. Anyway, he was a big contributor to conservative causes. Grew up in Massachusetts, kind of where I grew up. Just an interesting guy. And the only reason I bring it up is because there's so much history and current happenings in all the places that we have radio stations, certainly up in the Tahoe region, Tahoe. I mean, we've seen a flight from San Francisco out into the valley, all the way through to Sacramento. And by the way, Daryl, did you see the unrest in Sacramento a couple days ago? I guess it was last Sunday.
I was probably paying more attention to the bigger picture stuff at the time, so I didn't see Sacramento. No, but they say all 50 capitals are going to be affected.
Yeah, I think so, and I don't know whether that is good or bad for the mortgage interest rates. I mean, I'm going to stay in my lane here and not get too into what sure shouldn't happen on a political scan. But if you're in a house purchase right now and you're in any of these cities or near any of these cities, how is it going to affect you? How's it going to affect funding? If there is unrest in any of these places, what does your lender say about disaster funding? Do they fund during a riot? That's number one. Okay, so you're set to close. I guess when's the 20th? Wednesday.
I believe so. Yeah, Sheldon Adelson was the guy.
Yeah, Sheldon Adelson. Right. And 87. He's a billionaire many times over. Big Trump supporter guy, but Las Vegas guy. I mean, really just kind of entrenched there. Bought Sands Hotel, tore it down, put up the Venetian. Really big and out in Vegas. There's just a number of these types of investors, people out there who are just. Yeah, I think Adelson was also going to be a part owner of the Raiders, but he pulled out at the last minute. State stepped up. They built the stadium, which again, all these stadiums nobody can go to right now. But they will get to it. But let's get back to if you're going to fund next Wednesday for your loan, and you live within any of these 50 state capitals, and there's an alert out by the FBI that there's a problem, are you going to be able to fund that day? Ask your lender now. And then if you need an extension by your seller on the face of this, maybe you should get a handle on it and get ahead of it. I think it's just a prudent idea. Yes, I think it's a possibility. Certainly if you're in and near the DC area, certainly around downtown, yeah, you're going to have some issues because there's going to be, and much like it was in Portland, downtown Portland, or in Seattle, or in some of these other cities that saw a lot of unrest last summer. Actually, Portland, I don't think, I mean, I think the entire economy runs around this, the city's ability to operate while there's a protest going on. If they didn't have a protest, I don't know what they'd be doing, but there's always one there. I have a son who lives in Portland. I get the updates on a daily basis. Yeah, in Seattle too, a lot of unrest. So the country and what's happening politically, how does it affect you and your funding and your loan or your refi? And that's very important to understand. Nobody's going to want to lend on an asset which may be in danger or is in fact in danger, on fire, whatever it can be. These things are important to understand. So please check with your lender. Rates. Did I go into the rates yet? I don't think I did. 30-year fixed rate, 2.93, 15-year at 2.41. The FHA is at 2.38. Jumbo is at 3.38, and your 5/1 ARM is at 2.38. All of these are up. We're looking at the 30-year fixed inching up closer to 3%. Now, we haven't seen 3% for quite some time. I think, as I said in an earlier segment, we might see, well, if yesterday, I went on Housing Wire. We go to Housing Wire, we go to Mortgage News Daily for a lot of what we talk about. There's certainly plenty of other sites, plenty of other places to go to. I like going to a lot of the financial sites, whether it's CNBC or some of these others, just because it gives you an overall financial look at what's going on in the country as it filters down to you, the homeowner, or you, the person who has a job, wants to buy a home. It's really important to stay on top of the overall news. But they talked about ranges. If I could just find that particular piece of information. Yeah, here it is. And again, earlier I was talking about how the yields go up, the mortgage rate goes up, but they had a range. They had a range of what they thought this year might be. The guy is named Logan Mohtashami, and he's from, I'm not quite sure where he's from, but at least I quoted who the guy was. His bond yield projection, which is pretty important to understand, like how much we're going to be making when we sell treasuries. Last year about April, it was at 0.3. It's currently at 1.17, I think I said. Their range, his range is from 1.33 to 1.60. Now that's all within the 2-year range that we've been quoting over the last 3-4 weeks. But that's still a significant jump from where it was 2 or 3 months ago, even last month. And not conversely, but in conjunction with that, the mortgage rate projections. So these projections, you're really going to understand. You might not understand the bond market or why that's affected by yields, but you'll understand the mortgage market his projection, 3.375 to 3.625, which is what the projection is to the end of the year. That's pretty significant. We're almost at 3% right now. And so on the low end, 3.375 would be something I think pretty acceptable. Even anything below 4%, let's face it, those are pretty historical low rates. But in comparison to where they have been, I mean, I saw rates 2.25 at 30-year fixed. Now, the APR was a little higher, but that basic rate is pretty unbelievable. Well, you're not going to have that basic rate if these projections hold true. I think it's interesting to look at it. I think it's interesting to watch. A couple other things that's interesting to watch. Okay, so if you take the public companies out there that do lending, now we're used to companies like Chase and Citibank and Bank of America and Wells Fargo. Let's just call that what it is, right? They're big, huge public companies, and they do mortgages. Are they the leaders in the mortgage industry? No, they're not. But they're certainly top 10, right? These companies, but they're all public. So they take a certain type of loan, and that's it. 4 companies now, or just mortgage companies, are about to go public. Is it good for the business or not? I'll name them quickly here. Home Point, United Wholesale, Rocket Mortgage, and the new into the lineup as of yesterday, Loan Depot. You might have seen their new commercials out. People standing in line saying how great we were. We started 10 years ago, and now here we are. They're all going public. Is this good for you? I don't know. Anyway, I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening in this week. We'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.